Hey everyone, it's Tom Kradzer with another Rockstar Minute. And hey look, did something just break with the Canadian financial system? The Bank of Canada put out a press release this week, not a rest release, a press release this week that got literally no attention. The headline of it, here, we'll put it up on the screen actually. It says, expansion of assets the Bank of Canada will acquire for balance sheet management purposes. The key thing here to me is this expansion of assets. What exactly are they talking about? And if we zoom in on the third paragraph here a little bit, it's the first sentence says, as part of these changes, the bank plans to allocate a small portion of its balance sheet for acquiring federal government guaranteed securities by purchasing Canada mortgage bonds. Why is the Bank of Canada now deciding to buy Canada mortgage bonds and adding that to their asset pool? The only time I've seen a central bank buy mortgage bonds in this fashion is when the US Federal Reserve did it in like 2008 and started doing it in a big way when there was a financial crisis down here. You know, is there something going on in the financial system here in Canada that we are not aware of? And this is the kind of thing that like we can never predict as real estate investors. And just something, it kind of brought up just some perspective on the real estate investing strategies we talk about and think about a lot, and the perspective that you need to survive, because you never know when something, when some shit is gonna hit the fan, and if the real estate market will kind of come down and correct for a little while or a few years, or it will continue to just go up like fire. And you need to survive through the down times and the up times. So perspective that we use over the, over kind of our lifetimes is this, comes from when our personal family almost lost everything in 1990 during the worst real estate correction Canada had ever seen right here in the Toronto area. That was brutal times for us. And it gave us this perspective that when we buy any properties, we can't just look at a small time frame. You can't just buy a property and think, I'll be good with that property, I'll keep it for a year or two, and then I'll sell it, I'll flip it and make some money. We always believe you have to have a 10-year time horizon on any property that you're purchasing, even if it's a flip, something that you think you're gonna buy, fix up and sell. And the reason that you need that perspective is because the real estate market can go down at any time. And when it goes down because of high interest rates, a recession, whatever the reason, you may be stuck with that property and you have to survive with it. So if you can't see yourself owning a particular property for like at least a 10-year window, and you have to think about the uptrend and the downtrend cycle that could hit you, then don't get the property. To us, that's the best perspective to use, that convince yourself that you're gonna own this thing for over 10 years, no matter if the real estate market goes up or down. Be short-term paranoid and long-term optimistic is something we always believe in when it comes to real estate investing. So when we see a press release like this from the Bank of Canada, it kind of gets our wheels turning and wondering a little bit, like, are we about to see something in the Canadian economy that really hasn't become obvious yet? So we'll keep tracking this stuff. We'll keep sharing it with you. Hopefully that perspective gives you something to think about. It's really helped us in some of our real estate investing decisions. And until next time, your life, your terms.